Hi, everyone. My name is Dustin Miles. I'm excited to have Rebecca Taylor today. We've spoken a handful of times, and anyways, would love to kind of introduce her and Rebecca. If you could introduce yourself, and then we'll kind of jump into it.
Yeah, absolutely. Thank you so much for having me here today, Dustin. It's great to see you again. I live in Lynchburg, Virginia, with my husband of 16 years and our three kids. We've been investing in real estate since 2012 and started out actively investing while I was in the tech world for about 10 years as a sales and marketing professional, and then transitioned to full-time real estate back in 2020. Had the chance to get away for 3 months on the road after I left my job in tech and dreamed and thought, about what we wanted life to look like and found real estate to be really the best avenue for achieving our goals. And so dove into real estate full time. I got my license as a realtor. We actually did a cash out refinance, pulled all the equity out of our house and bought more rental properties, and then went to go work for a couple firms over the last couple years doing syndications and fund to fund. And so it was a blast. And we started our company last year, Tailored Investments. And so both an active and passive investor, and I'm just really passionate about real estate.
Awesome. Yeah, that's cool. So how, I guess, I don't know. I went to a bunch of different clubs and I was dipping my toes in the water. And honestly, it took me a little while to pull the trigger.
Mhm.
How did you kind of get going, or how did you read some books or go to some seminars or something to try to, because from the outside looking in, you see the shows, flip this house, whatever, and it looks interesting, but the reality is it's not all rainbows and unicorns, as we both know.
Yes, yes. My dad is a big investor and entrepreneur, and so he was teaching me
Cool.
about investing at like 9 or 10 years old, but not real estate.
Oh,
We were
wow.
we were doing like penny stocks, and so
Oh,
I
cool.
remember at a young age learning, about money and the power
Mhm.
that there was there, and also the responsibility. And so he was also a pastor and didn't make a lot of money, so he was with five kids trying to figure out like how do I take care of my family? I need to find some other side gigs, and so he tried a lot of things and most of them weren't as successful. And then he got into real estate back in 2004 and has done just about everything in real estate. And so
Oh,
it's
wow.
been amazing to watch him. He's out in Montana, so we're not together in the same state, but we talk real estate. I was just on the phone with him earlier talking real estate. So it's just
Hmm.
fun. He had been pushing us for years, like get into real estate. The earlier, the better, like start buying now. And so that's why, and like I said, in 2012, bought our first rental. We actually house hacked. I'd been listening to Bigger Pockets and they were like,
Wow.
this is the easiest way to get in. And so we bought a house that needed a lot of work and put a ton of sweat equity, time, and money into it. And it was the worst house on a really nice block. And so we ended up fixing up the basement and getting tenants in there and managed them for a long time. And then we ended up paying off our house early. Actually, my husband had this crazy goal.
Wow.
He's like, listen, I think if we make really good financial decisions, we can put a lot of money aside, pay off all of our debt, and we'll be in a great position. So we did that. It was like before I turned 30, we were totally debt free. And it was so
Wow.
nice. And then we realized, hey, we don't really have a goal that we're working towards. And we have all this lazy equity in our home. And so
Mhm.
that's when, like I said, in 2020, we kind of reimagined our lives and we're like, hey, we have hundreds of thousands of dollars that we could use to go buy property. And I think a lot of people from the outside would probably think we're crazy. Like you have this house
Mhm.
paid off, like now you have a mortgage again. But that was one of the best decisions we made. I mean, that truly like was a launching pad in making our money work for us. And it's been really, really incredible how much it's affected our lives.
That's awesome. Yeah. No, I could definitely see from the outside looking in, people are like, you don't have a mortgage and now you're adding to that. Like that doesn't make sense. So,
Yeah.
but yeah, I mean, you're able to leverage all of those dollars and go buy income producing, assets from there that, also there's appreciation and depreciation and all that too. Um, so at what point did you, as far as getting into, syndications and apartments, I know you do not just apartments, but some other stuff as well. So when did you kind of get into the syndication game?
Yeah, so 2021, I actually had heard my former boss, Paul Moore from Wellings Capital, had heard him on Bigger Pockets, and so they're here locally in Virginia, where I live in Lynchburg, and so they were hiring a director of investor relations, and so went to go work for them, and it was an incredible experience, learning and growing, and we did our first passive investment. We put $100,000 into a deal, a fund to fund, which was a lot of money, and my husband was
Yeah.
like, "What is this? Like, this is different from the way that we invest. Like we're active investors, and you're telling me you want to go
Yeah.
put money into something that I can't control." But it's been good. It's gone well, and so I was able to just learn and glean. I mean, the fund
Hmm.
of fund that we did, it's a mix of assets, with self-storage and mobile home parks, a little bit of multifamily. And so you're working with different operators in different locations. And so it was a really, like I said, a good experience working with investors and learning the ins and outs. And then I transitioned over to another company that was just doing value add multifamily. And so that was very specific. You're one property that you're focused on, and a whole lot more involved in the day to day, with operations. And so that was a really cool experience too, again, before starting our company last year.
Wow. Okay. Yeah. And those are yeah, two very, two good sized groups. They've been doing all of doing been doing that for a while. I know before we started recording, yeah, I don't remember when I first met or I guess got introduced to Wellings Capital and all that, but it's been a while. So good, and it spoke to them more recently, and awesome to see him grow. So, and then, I know you're in multifamily, and then you're also had gotten into some other kind of asset classes as well.
Yeah, yeah. So last year, we were introduced to an amazing company that's doing assisted living. So it was actually through my
Mm.
business coach. She introduced me to one of her partners. And so we decided to work together last year on acquiring a 125 bed assisted living facility in Wisconsin. And
Oh,
so
wow.
that has been a really cool asset class to get into. And I love multifamily. Like, don't get me wrong. I think one of the challenges we've seen the last couple of years is it's been very heated. It's an overheated asset, or it had been. I think things are changing now, but you were competing against a lot of other offers, and prices were being driven up, and interest rates were high, and we've just seen
Hmm.
the market shift a lot, and so finding good deals is hard, and so assisted living is a kind of a different flavor, and there's a lot of opportunity out there. It's such a growing market. That population is set to double by 2060, and there's definitely not enough beds for this.
Wow.
So anyways, this group that we partnered with is phenomenal. They've also invested in multifamily too. That's kind of how they got started. And so they've transitioned, and they still have some multifamily, but they're also really focused on assisted living in this state. And so they've done phenomenal with that asset class. We invested with them last year, and it's been we should hit 8% cash flow in this first year, which is fantastic. My parents got into that deal. It was actually their first syndication, which was again hard for my dad as an active investor to be like, wait a second, I don't have any control. This is different. So,
Right. Right.
but we are actually just closed on another property this week in Wisconsin. It's an 84 bed assisted living facility, and
Wow.
very close by, so it's nice because we can share,
Hmm.
some of the people and the processes, and all that we've learned with this other property. A lot of it will be used at this new one, so we're excited about that. And I think there's just going to be a whole lot more demand and need, and also the opportunity to make an impact. As people in those
Right.
later
Right.
years, like they want a safe place, they want a
Hmm.
comfortable place, they want community, they want an enjoyable, like just atmosphere where they can spend their latter years. I mean, really, the only reason we ever lose tenants or residents is because they pass away. Like those
Yeah.
people are truly living some of their last years often in a facility like this. So I just love the fact that we're able to create that, and they're happy and they feel cared for.
That's awesome. Yeah. Yeah, that's a interesting space. I don't know it, well. I have a few friends that are in that space, and yeah, sounds definitely, I mean, a huge need and all that. And it was interesting because I was on a fund committee for a short time, and I remember one of the folks presenting was they were a pretty large operator out of Florida, and doing assisted living and all that. So it was interesting just to kind of see that, because I'm not exposed to that a whole lot. So and tailored investments. So kind of what you started that I guess a year or two ago, and what's kind of the goal there, and kind of where do you see your company going?
Yeah, great question. So our goal is really to provide a tailored investment option, for our investors. We are obviously we love real estate. We're real estate
Mm-hmm.
investors, and ultimately, though, I love the freedom that real estate has provided to us, the time freedom,
Hmm.
the ability to be more present for our family. I'm focused on how do I make my money work harder than I do, so that I'm more
Yep.
available to my kids and my husband, my church, my community, and so I think our company is. We provide an avenue for people to make money through real estate, but ultimately, I think where we're going is, and I don't even know how all this looks. This is still we're defining it,
Mhm.
but to provide more help in investing in all aspects of your life, your mental health, your spiritual health, your physical health, like all of those things I think are really important. Like you can make all the money in the world, but if all of those other areas are struggling and they fall by the wayside, what's the point? Like what's the point
Yep.
of losing your family if you have all this money? Like who do you get to enjoy it with? And so I don't know what that looks like. I mean, again, right now our goal and our focus has been real estate, will continue to be real estate, but long term, I want to figure out how do we help people make good decisions on those other fronts. And so when I talk to potential investors, I share what we're doing, some of the things that we're working on, the ways that we can help them put their money to work. But I'm not always the right person for them, the right company for them to invest with. And so I love being able to point them in the right direction and
Mm.
be a resource, because there is a lot of
Yep.
great, like your company, amazing operators out there that they maybe should work with and not work with us. So I think just having those conversations, getting to know people and hearing about their goals. I ask a lot of questions during these calls. And then again, it may not be me or it may be us that we can help them reach some of those goals financially, but also with some of those other areas of their life as well.
Gotcha. Okay. When you're, I guess probably, at least maybe somewhat for assisted living and all that, but probably more focused on the multifamily, at least just because that's what I know better. But when you're looking at a multifamily deal, do you kind of have, what does that box look like for you guys? Are you guys, what parts of the country are you looking in? Is there a certain vintage? Just, some characteristics that you guys kind of look for.
Yeah, good question. So we're really focused on our partners in these. So we just did a property here in Lynchburg, Virginia. It was a 100-unit multifamily property this summer. We closed in June on that, and
Mm.
that deal was through a partner that found it and created that relationship. And so we were laser focused on who's the operator that we're partnering up with, and are they going to do things well? Do they have a solid track record? Can we work
Right.
together? Do this deal together well? I'm actually the only one here locally, so the other guys are
Mm.
not here in the city. So
Oh,
I'm able to be boots on the ground, and go out
yeah.
to the property pretty regularly. We have an awesome property manager, but that was really my first focus was on the partner. Obviously the deal itself we're looking at too, but first and foremost, I'm looking at who am I doing the deal alongside, because I'm bringing capital, I'm bringing marketing and sales, investor relations. There's some different aspects that I'm bringing to the table in my, again, locality here, and so. But then I think from like a vintage standpoint, I like to be like 1980 or higher. I'm definitely looking at newer things. This was a 2008 build. So I loved the fact that it wasn't too old, but we all have had a lot of HVACs break in the last few months. So that's just something,
Oh,
like it's a
yeah.
16-year-old property. So you're getting
Yep.
into the life of some of those areas, but it's been very well maintained. And so that's something we look at too. I've invested in heavy value add deals as an LP, but from a GP standpoint, I'm not looking to do as much on the heavy value add side right now. Not to say that we wouldn't in the future. I think there's just a lot of risk and unknowns, which are not
Mhm.
bad. I think it's just something for me. I like the lower lifts, that we can
Mhm.
focus on, and they don't need a ton of work. And so that's really been right now with our focus and our partner. Like I said, 1980 or newer. If we can get newer, it's better. I like to be up at like 80 or 100 units is ideal, maybe more. That
Mhm.
we have a property manager that's economies of scale, that they're going to give us a lower percentage or they're going to charge us less for the maintenance or for the management fee. I really want to see properties that are cash flowing. That's big for me.
Yeah.
We live off of, like, this is my full-time gig is real estate. So cash flow is really important for us. So
Yeah.
I want to see deals as for my LPs, my investors that are already cash flowing right out of the gate. So this one that we closed on this summer, we should hit around 6% in the first year. And so when
Oh,
I'm
great.
looking at the return profile, like I want to at least more than double my investors' money over that 5-year hold. And obviously time will tell, and we make projections and assumptions, and there's only so much that we can control. But at the end of the day, my goal would be that we're at least doubling their money and that it's cash flowing throughout the hold and they're getting those other benefits as well. So in terms of the side of the country, I like to be over here. It's nice if it's within driving distance. The property up in Wisconsin we were at this summer, it is a little bit further. I hope
Hmm.
to be back there this coming year. But if I can stay over here on the side of the country, it's certainly helpful because I want to be able to pop in if I need to and take a look at the property.
Gotcha. Okay, cool. And then were you ever part of I know you were part of a few organizations that had, great experience under their belt and all that, but have you ever been part of a mentoring program or coaching program, or are you currently?
Yeah, so I definitely will say that podcasts have been really helpful. I listen to a lot of
Mm.
podcasts, read a lot of books, a lot of self-education, been to, gosh, many conferences, different real estate conferences around the country. I'm looking at my calendar for next year, trying to plan out. I have so many on my schedule that I want to attend. And I'm like, I got to be careful. I got to actually be here,
Yeah,
manage
right.
all the things we have going here.
Yeah.
I love conferences because I just feel like not only are you
Mm.
getting educated, but you're making really good connections. Like those
Yeah.
have been some of my partnerships is through being at
Mm.
conferences or my investors or so I can't speak enough to the power of like I was actually just at a mastermind about a month ago with other women in real estate and I was able
Oh,
to
cool.
if work I have a new investor that I'm working with that just has
Yeah.
bring in almost 200 grand for a deal. So, those are awesome opportunities. I can't say enough about, I mean, it was an investment being there at that with time and money, but I think just being a part of those events, being in the room with other people that are a lot smarter than you is really, really valuable. So, and then I also hired a business coach last year. That was, I think, February. So she's been phenomenal. She's, like I said, the one that introduced me to one of our partners that we've done some deals with. And I'm a part of a mastermind with other people in the space. We meet weekly. I can't always be there with other events going on, but that they're phenomenal. So yeah,
Awesome.
it's been a mix of things, and I'm just grateful like for such an awesome community. People, I feel like in this space, as you know, like everybody's so friendly and everybody wants to help each other.
Yep. 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 Yeah, that's one thing that I guess yeah, I've also felt that compared to I've been in some other just kind of industries, and it's a lot different. So it was more of don't see what I'm doing, type of situation. So
Yeah.
yeah, I think most people are pretty open, and kind of, everybody's, very similar. Everybody, into personal development, growing, and kind of more of an abundance mentality in
Yes.
general. So,
Actually, just one other thing too that I'll mention that we just like kicked off in this last week. Best Ever has a community that they're launching. And so I'm one of
oh,
the Best Ever founders. And so I get to be a part of that and helping facilitate and talk about different, things in commercial real estate. So I'm super excited about that. It's been
oh, cool.
get to know some of those people that will be a part of that community. So something to check out, and we're again just getting it kicked off. I think they'll open it up for members to come in and really launch, I think in December or January. So we're
Oh,
just
cool.
getting it started with the founding group. Mhm.
Did did they merge with left field investors?
There, I think so. I think there's
Okay.
I don't know all that's happened on that front. I haven't kept up with it, but
Mhm.
I think there has been some things happening over there.
Okay, gotcha. I thought I remember talking to someone and they're like, "Oh, they merged." I'm like, "Oh, cool. Okay." So, well, that's awesome. And then, do you have, because you'd mentioned some podcasts and all that. Do you have any favorite podcasts or books that you'd kind of recommend or that you really enjoy listening to or reading?
Oh my gosh, there's like so many. Hold on, can I just pull up my list?
Oh yeah, yeah, go for it. Yeah,
There's
I
just
I
so
have to do the
many.
same thing. So,
I wasn't prepared on that question, but I do have a lot of
oh,
podcasts that I love. So let's see. I mean, I have listened to the Left Field Investor.
mm,
I think they have a good one. And then the Real Estate Syndication Show with Whitney Stool. He's really good. I like The Conscious Investor, Julie Holly. I really like her
Yep.
podcast.
Yep.
Obviously, commercial best ever commercial real estate. They've got a lot of podcasts there.
Hmm.
One that's like totally not real estate related, but I love listening to the Influential Personal Brand podcast. Um,
Mm.
so that may not be, but when I think about sphere of influence and how to build my business, that's something that is important
Yeah.
for me. So let's see. There's yeah, the Capital Raiser Show, Ruben Greth. I mean, there's a lot of great
Yeah.
ones out there. So I don't even know
Awesome.
where to start because I feel like yeah, it's been a joy to get to. Jason Ballara from Lark Capital. That's one I
Oh
got
yeah.
podcast a couple weeks ago, so that was fun. In
Cool.
terms of books, I got to pull up my list too. Bear with me for
I'm the same way. So
I should have thought through these things ahead of time. Let's see. So I just recently finished Faith Driven Investor. I am a Christian, so that was a really impactful book as I think about how I invest. I also finished a book called let's see, Take the Stairs. That's actually how I got connected with the brand builder group, Rory Vaden. It's all about doing things that are hard, but the long-term returns, and so
oh cool. Okay.
there's a lot of other like real estate books I could certainly throw out there. I love
Yeah.
the Go Givers.
Oh yeah. Yeah.
That's
Yeah.
it's powerful. I read that one a couple years ago. Uh,
Who I can look it up. Who wrote the Faith Driven Investor?
there's a lot of different authors, but I
Oh,
can't.
okay.
Well, a lot of different throughout the book. So every chapter is a different business and owner that started
Oh,
the business. So they share about, what
okay.
happened and how. So it's a great. I really, really like that one a lot.
Okay. Yeah, I'll
Uh,
check that out. Cool. Okay.
so all my books are, yeah, I have a little long list. I won't go around, but I I love
Yeah.
to read, and it's not always real estate, to be totally honest. I feel like I'm
Yeah.
immersed in real estate all the time, so it's kind of fun to listen to, encouraging books, or I don't
Hmm.
ever listen to nonfiction, but I do enjoy some of that. It's fun.
Cool. That's awesome. Well, cool. I want to, yeah, take up, tons of your time, but, if, is as far as people getting a hold of you and all that, what's the best way to get a hold of you? I was looking at your LinkedIn profile. You have you have good, good, well done LinkedIn profile, by the way. So, but yeah, what's the best way for people to get a hold of you? Website, email, whatever you would like to share.
Yeah, yeah. LinkedIn's great. Connect with me there. We also have a website that's tailored, like our name, tailoredinvestments.co. And so we've got a little freebie up on our site with some tips for creating financial freedom. Grab that and join our email list. We send out pretty regular information on things that we're working on or tips and tricks for investing in real estate. So I would love to connect, with your listeners. If there's any way that I can be a resource, I'm happy to help.
Awesome. Well, yeah, appreciate your time today. Everyone, please be sure to reach out to Rebekah. Super, super nice, super helpful,
Thank you.
and just a wealth of knowledge. So appreciate you, Rebekah, and have a great day. Talk to you soon. See ya.
Bye.